Hi there, my name is Joni Hyde, and you hear me talking all the time now about how to eliminate your debt in record time and how to save on the interest that you have already repromised to pay the financial institutions. And a lot of the scenarios I share always include a situation where someone has a mortgage. And I wanted to show you a scenario today with some folks who just have some consumer debt and credit cards. All right, so this particular family has a Lexus car loan with a $32,546 balance at right under 5% interest. They have a personal loan of some sort at $24,495 balance at 8%. They have a Barclay credit card with a 7233 balance at 26.99% and a Bank of America credit card with a balance of $14,925 and at a 27.99% interest rate. So overall, their debt is $79,199. Okay, so they owe the bank $79,199 in principal debt. That's not including the interest that they've promised to pay back the financial institutions. Okay, so got that right below 80,000. All right, so what I do is I sit down with people, I meet with them over Zoom, and we take a snapshot look at what their debt is actually costing them, and then we show them a better scenario. So in this case, I want you to draw your eye to the middle number. So they have a nice strong income of 8,900. Their total monthly debt is costing them 1974, but $809.45 is going towards interest payments to pay that principal $79,000 of debt off. So that's a lot of money. $809.45 a month towards interest, that's money that's gone forever. So here's another look at that situation. Their current debt balance is $79,199.40. They have to pay that back to the bank. Now, there are settlement programs out there and things that will help them settle on that debt, but that's going to hurt their credit. And that's just not what they want to do. They want to repay their debt, they want to maintain and actually improve their credit score. But they had an open mind and they were open to looking at a financial GPS that could help them cancel a big portion of the interest payment. So here's what I want to show you. In addition to that $79,199, they've agreed to pay the bank an additional $51,528 of interest. That is 65% more than what they owe. So the total interest percentage or their total interest volume is actually 65%. That's huge. And that is so typical, though. It's so typical for what we are doing as Americans. And the thing is, you just have to open your eyes and be willing to take a look. And also, look at this as something that, you haven't seen this before. So sometimes people are skeptical, but it is an award-winning program that won an Ernst& Young Award. It has a 16-year track record. And so let's look at the overall picture of what this program is going to do for these wonderful people. All right, so what we're looking at is option one. This is what the bank's plan has them scheduled to do. The bank's plan under option one in red has them scheduled to pay back their lender $51,528 in interest and fees to repay, in addition to repaying the total principal debt volume of $79,199.40. And following the bank's plan, that would take 22 years to pay off. And hang on a second, I'm going to show you a little bit more about that in a moment. But on our program, again, it's a money back guarantee. It comes with professional coaching, and Look at this, including the cost of the program. Including the cost of the program, it's only going to cost $25,394 of interest, which is saving them $29,518.67 of interest. That is a huge chunk of money. But again, this is the part that I really get excited about the most is the compressed time that this program helps you pay those debt off. And again, this is not changing their budget or their lifestyle. Okay. So we're not asking them to start eating rice and beans and sell their car and all that. No, this is a strategic program. It is a financial GPS that has harnessed many, many banking algorithms into one strong program technology that has many banking principles such as strategic payoff, interest cancellation, interest accumulation, interest float, all of the arbitrage that the banks know how to do. We're putting this power in the hands of the consumer. And so this is what really excites me is this is the amortization schedule. Look at the column in red. These are the years over. Again, remember, if they followed the bank's plan, they would be paying on their debt for 22 years. And in red, you'll see year by year. Look at year 5, for example. In red is what they would still owe on the bank's plan. They would still owe $11,574.62. Look at the column on the right. They will already have accumulated, if they choose to put that money that they were spending on that debt repayment, if they choose to put that, let's say, in a 1% interest bearing compounding account, they would already have $26,000 towards their nest egg, where on the bank's plan, they would still be paying off their debt and owe $11,000, more than $11,000. And remember, they had a car loan that had almost 5 years left, and another loan that had over 4 years left, and several credit cards. So look at the variance here and the wealth accumulation by the end of 22 years. Look at that, $520,000 just paying themselves that amount that they would have been paying to the bank for all of those years. So there is so much value once you've got your debt paid off, because then that is money you could spend. That money you could hide it in your mattress, you could put it in a 1% interest bearing account, which is what we're showing you here. But the bottom line is canceling interest payments, and getting your debt paid off as fast as possible, with a program that will help you do that strategically without changing your budget or lifestyle. And that's the big thing here, guys. Most people don't have an extra, two or three or $4,000, to put towards their debt. So do it the smart way. Use a financial GPS that can help you become debt free faster than anything else that's out there, faster than any spreadsheet or any app. This is a very intricate algorithm, pages and pages and pages of coding, and 16 years of development with a money back guarantee. All you need to do is ask for a complimentary savings analysis. The first step, though, is just reaching out, and send me a direct message. We can exchange phone numbers and set up a time to chat. That's the first step. And then I can give you a little more information once I know your situation. And then we can set up a complimentary, no obligation savings analysis and see how